In this chapter, we will discuss 1. How charts are formed, 2. Single candlestick pattern, 3. Dual candlesticks pattern, 4. Triple candlesticks pattern. How are charts formed, you ask? Charts are formed out of the combination of different candlesticks. This means that what makes up a chart is different candlesticks combined together. The combination of candlesticks can tell you how the buyers and sellers in the market are behaving, and it will help you in predicting the next step. There are 2 types of candlestick chart patterns that make sense to me. 1. Single candlesticks pattern. 2. Double candlesticks pattern. These types of candlesticks patterns are very crucial in reading the charts, so it is good to note them down. Single candlestick pattern. This is a candlestick pattern that involves a single candlestick in pattern. This means when you are looking at the chart pattern here, you will be looking for just one single candlestick, and you will neglect the rest of the candlesticks. What I mean is that when you are sure that a trend will change, you will keep waiting and looking forward to seeing a particular candlestick. When you see this candlestick, it will serve as a confirmation for your prediction, and you will immediately place your buy or sell. There are 2 types of single chart patterns that make sense to me, and they are 1. Hammer, and 2. Inverted hammer. Note them down. 4. The hammer. The hammer signifies a trend reversal. It occurs at the bottom of a downtrend. It is characterized by a very long shadow and small body. Remember, I said a very long shadow, not a short shadow. So what I mean is that when you spot a downtrend and you are monitoring the downtrend of a trade, you will be expecting that sooner or later that the trend will reverse. So a special indicator or signal you should watch out for is the hammer. The hammer will serve as a confirmation signal for your prediction that the downtrend will reverse. Remember, it only works well when spotted in a downtrend. Note also, this is how the hammer will look like on the chart. Remember that the upper shadow can be little or empty, but the lower shadow will be very long. For the inverted hammer. From the name, you should understand what an inverted hammer is. It is the opposite of the hammer, so I would love you to pause this video and go to your chart. Screenshot an inverted hammer and send it to me so I will be sure you are following up with the lecture. Check the link in the description below to join our Telegram channel, if you haven't. Let us look at the double or dual candlestick pattern. There are 2 types of dual candlesticks. You should watch out for 1. Engulfing candles and 2. Tweezer tops and bottoms. For the engulfing candles. These are categorized into bullish engulfing and bearish engulfing candles. Bullish engulfing candles is a 2 candlestick reversal pattern that signals that a strong upward movement may be coming. Bearish engulfing candles is a 2 candlestick reversal pattern that signals that a strong downward movement may be coming. So once you see an engulfing bar and you are expecting a trend reversal, this will serve as a signal. So this means that if you are monitoring a trend and you are expecting that the trend will reverse soon, and you see an engulfing bar instead of hammer or inverted hammer or the rest, this can also serve as a signal. For the tweezer tops and tweezer bottoms, tweezer patterns are also reversal patterns that you should look out for. They are mostly spotted when you see an extended uptrend or downtrend. What is an extended uptrend or downtrend? An extended trend is characterized by a very long bar or long bars. After you see the extended trend and you are expecting a trend reversal, just be looking forward to seeing the tweezer tops or bottoms as the case may be. Once you spot the tweezers, it will serve as a signal confirmation for you for sure. Wait a minute, isn't that the same as the Marubozu? Yes, but in the case of the Marubozu, they are supposed to indicate that a trend is supposed to continue. In trading, there are levels that you are going to expect reversals, and there are levels you are supposed to expect continuation. As long as you see this pattern in an area where you are supposed to expect a trend continuation, then you will refer to it as a Marubozu, white-black Marubozu. And if you see this pattern in an area where you are supposed to expect a reversal, then you will refer to it as tweezer, that is, tweezer top or bottom. Here is an exercise for you. Go to your charts and find me 2 marubozu, and 2 tweezer tops or bottoms so I can be sure you are following. Join our trading channel where we drop signals and analysis for trades. Link in the description below.